on his own. Took him about 6-7 months to develop currensys as it stood for many years, and actually sold the first program back in 2005. I started out the conversation by telling you that trading is risky. So you need a quality system, you need a quality methodology, and you need something that addresses trending markets, choppy markets, reversal markets, and breakout markets. So all of the types of market, all the types of markets that basically we trade in. Normally on a market squeeze or a very tight market, we're not trading those types of markets. But most systems are designed around one particular market type, whether it's a trending, choppy, reversal, or breakout market. Those particular systems usually fail during times of when the market changes. So the market is in one of those 4 different types, you know, around 30% or a little less, or about 25% of the time. So the market changes. And when the market is not working with those particular systems, usually you get into some types of drawdown and potential false signals. I'm going to be showing some recent signals, some recent trades, things that we're doing right now. You know, not some stuff from about people are throwing in questions and stuff like that. I'd appreciate it if we kind of hold questions till the end, if at all possible. Write it down, whatever, and we'll go from there. Probably turn up your speakers on your computers, because we do have sound. Around the 15-minute chart, and of the 3 of the systems consists about 15 to 20% of our signals. It was developed around the 15-minute chart because you need market squeeze or market time, at least 8 bars in a row in which we have very, very tight market, and typically that's designed around the Asian market. When the European market opens up 3-4 o'clock, whatever, Eastern Standard Time or Eastern Daylight Time, typically we get a big boost in the market, and we have a possibility of having a breakout right there. Breakouts really fill a void in our system very nicely, where it doesn't require a lot of movement in order to get a signal. Our other programs, obviously the dot and reversals, need market movement. They need MACD to oscillate, whereas breakouts don't need that. It actually needs the opposite. It needs quiet time. When the MACD approaches the 0 line or flat market, signals are filtered out. You can see examples of these on many of our YouTube videos where I talk about Look Mom, No Dots, and that's a currensys FX, where the system actually keeps us out of the market because there's not a lot of market movement. But breakouts, however, need that market consolidation because it's a setup for what we know will happen. Don't know exactly when, the exact time, but we do know that there will be price action. Breakouts and dots really complement each other well. Breakouts need about 14 days to calculate ATR, average true range. So the charts that we, whether it's on any of the systems, need at least 15 days worth of data. Again, I say about that breakouts need a squeeze period. Typically the Asian market, where prices are very tight, and I said before, needs about 8 candles, which is 2 hours worth of squeeze to start to trigger. Our breakouts came around by from John Bollinger in his book Bollinger Bands. Breakouts are good in Forex because there's usually periods of low volatility, low volume with low volatility, and these are some of the prerequisites for having a breakout. Most trading systems have a breakout, and to that end, not all of them are very successful. There's a balance between when trading these, where entries are very tight, you get false breakouts. When they're too loose, you give up too much. Price is neither cyclical nor forecastable. Volatility is. So we know eventually volatility is going to come. And low volatility begets high volatility. High volatility begets low volatility. Very important to know that. During the trigger period of the breakout system, the breakouts are recording the highest high and the lowest low. Once that is done, the ATR, usually 80%, and gives us entry prices above and below the market. Martin, no, not yet. I'll get to that in a second, okay? With each new candle, price may change based on new highs or new lows and changes in ATR. This means that price is static for 15 minutes and then it's subject to change. Breakouts require very specific criteria to change. Price has to actually push through with authority. Let's look at a couple of breakout scenarios here. And I promise you that these are, fresher charts. This actually was the 17th, so this was late yesterday. We had a breakout on the euro dollar at 122.56, and we're going to show some 240 charts a little bit later, and you have to take a look at that and see that we had a short position on the euro on the 240, which validated, and then we also, when we dropped down to the 15-minute chart, had a breakout here. So this particular breakout went from 122.56 to a low of 121.88 pip move, and we had a dot in the opposite direction, which we gave up a little bit of room there, and it validated at 122.25. So this particular move being about 30 some pips, one contract, $300, in a matter of a couple bars. But this is an example of market consolidation from about 7:15 through 10 o'clock. Market was in consolidation. Then all of a sudden we have an explosion of volume. Probably some news event. I'm not sure what happened then, but we had an explosion of volatility and volume, and we had carry through. So we had all the criteria here. We had market squeeze, we had volume coming into the market, an explosion through 122.56 that carried 122.56 that carried down to a low of 121.88. So that was a very good breakout. Here was a breakout, and this is on the 13th. Again, I'm sorry that I'm going back in time here a little bit, but that's what the charts are giving me. So we had, again, market consolidation in through here, into this area. We had an explosion of price. We had a breakout at 122.27, and this particular trade was profitable after 20 candles. Our signal lasts for 20 candles, and we exited the market at 122.37. So that's about 10 pip play there. Not very much of a breakout, but such is life. Still a winner. Let's take a look at pound dollar this morning. We had a breakout. Also, we have market consolidation, boost of volume, market retraced a little bit. Could have actually gotten a better price, but our price was 57.04, and the market then took out after consolidation, exited at 57.22. So that's not a bad trade. That was this morning. Here's a example of a breakout short at 156.16. This was yesterday. We had, again, some market consolidation in through here, not a lot of volume. All of a sudden we have a long candle or a boost of volatility. It breaks and market goes down, exiting on a gray dot in the opposite direction, 155.94. So nice trade there. Same situation here, some consolidation, and this particular trade didn't work out for us. We would have gotten stopped out at 155.23. But I'd like to talk about that because our system looks for either if the on the percentage of ATR, if it's over 80% or below 80% ATR. And if it's above 80% ATR, that means average movement, okay, for the day, then the system will print a yellow line prior to getting a breakout signal. So it warns us that that particular movement is already 80% or above ATR. So it cautions us to not necessarily take that trade and heed that warning. This one here would have failed. We would have gotten stopped out. To the long side, we had another breakout, which was a winner, closing out at about 156.39. So another 25 pip breakout on this particular move. We've actually tested the program out on euro dollar, pound dollar, dollar Swiss franc, and pound yen. But the breakout system does work on all pairs. I would caution you to make sure that you test out those particular pairs before you start trading them, and just be aware that we have not fully tested all of the pairs out there. Give an example of one more on the Euro CAD this morning, and in our live trading room that we do now have on a daily basis, which you can be part of. And if you're interested in that, you can get in touch with us again at currensys.com, support at currensys.com, or John at currensys.com, both of those two. But here was a nice breakout on the Euro CAD. Some people don't trade some of these cross pairs or less, I guess, talked about pairs to trade, but I certainly like them a lot. And I use them when I'm looking at correlation and how the majors are playing across the board. So you have Euro dollar, Euro yen, Euro Aussie, Euro New Zealand, Euro CAD. And we'll talk about a trade this morning where we got like signals across numerous pairs, all correlated, showing us that we needed to go long. We see a black dot here, and we'll get into what the black dots are. But they all have dots within one or two candles of each other, and this is a great time of which we need to move on the market. But here was a breakout at 123.65 and went down 30-40 pips, and that was a nice move this morning for us here on the CAD also. So when price hits our breakout line, it gives us a specific number or a price in which to get into the market. Many of us don't necessarily jump at that particular price, but when we did all of our testing, we took price as it showed. Certainly you can get some better price fills if you hold off on the the trade getting in at that particular number, but certainly you can get worse fills and miss out on some good trades. So in my opinion, if you see a breakout and you see the other correlated family members doing certain, the same things, that you move. Obviously red is for short and blue is for long. Something about our breakouts, which many of you probably don't know, is 2/3 of our breakout signals never get validated, and they just go away. I've left a lot of the trigger lines on the lines here, but when a breakout is not triggered, obviously it goes away. And a breakout signal is good for 20 candles or 5 hours. At the end of 5 hours, there's decisions to be made if you didn't have a dot in the opposite direction and or a 314 EMA cross. When I'm going to stay into the trade or where I'm going to exit. But if we get a dot in the opposite direction and a 314 EMA cross, those are as his strategies for our breakout specifically. If a dot happens directly after one of our breakout signals, and typically we get a dot usually within 1 or 2 candles after an initial breakout. If the breakout has not traveled 40 or more pips, then Tom says he can't get in. Sorry, Tom, I'm not sure what's going on with your sound. I believe everybody else has sound. I've asked a few times if we have sound, and people have come back and said yes. So sorry you didn't get that. I am trying to record the thing for today, and certainly if you have specific questions, Tom, get back to us. So exit for our breakouts, as I've talked about, is after 40 pips of profit. We look for a 314 EMA, either time, which is 20 candles, and or a stop of 60 pips, or a dot in the opposite direction. All right, I'm going to talk about some reversals, and I'm going to jump to a 240 chart real quick because I know that there is a dot there, and this is a current chart. Had a nice short reversal, has not validated yet, and validation here would be 78.24, which has not validated yet, so we are still in this short trade. But reversals, when the market is widely deemed to be chaotic in behavior, the market becomes more predictable. First, reversals must exceed a minimum number of pips. This prevents false signals. A minimum width makes sure that the market is moving before a dot will appear. For those of you who are Japanese candlestick pattern guys, a pattern which occur at the bottom, like in this scenario right now, is called a hammer. And a hammer is congruent with oversold conditions. Hammers are characterized by a long wick relative to the body, and we talk about hammering out a bottom. Great indication of the bulls buying and refusing to let the price fall past the hammers. The best hammers close near their candle high. So this is very close to that. So we got a reversal dot because it is a hammer. A short or a shooting star occurs at the tops and is concurrent with overbought, characterized by a long upper wick and relative to the body. Japanese believe that there's trouble overhead. The bears start to sell, stop trade from moving higher. Best shooting stars clothed near the candle low, similar to the hammers. Reversals are about 10% of our signals generated by the three signals, and they are almost always against trend. They're about 50% accurate. So you ask why we even bother with those. Well, we feel that when they're right, they're really right, and when they're wrong, there's more than enough opportunity to get out and an exit with a small loss or even a little bit of a profit. Our exit strategies are on the reversals are time. Obviously, we like to hold these particular signals for a minimum of 5 candles. If after 5 candles we are not into profitability, we need to start to look to exit that market. So we have time-based, 5 candles. If after 5 candles we have decisions to make, either we're going to stay in that trade on a candle by candle basis and moving our stops up ever closer to price. One moment, folks. Tom is Tom Sutherland, actually Southland, is having I guess issues with our sound, so sorry about that. Anyway, 5 candles. We either staying in that trade on a candle by candle basis, moving our stops up to protect our account, or we're exiting. We have a dot in the opposite direction, which would take us out of the trade, or a MACD cross would be our last exit strategy. As the candles go out into the future, obviously the signal becomes less and less of a probable trade. So as we move out into the future, if we are not into profitability after 5 candles on a reversal dot and some of the other predefined candle or time or times that we have defined on some of the other signals, we need to either look at the market and say this particular trade is not working out for me and I need to protect my account, raise my initial stops up to possibly stay in the market a little longer, give it a little bit more time, and or exit the trade. So what I'm saying is the probability of a trade working out, the further and further it gets away from the signal candle, becomes less and less as you move forward in time. So if we're not into profit, we need to protect the account. Number one thing in trading is to protect the account, because we can always come back to fight another day. If we do not protect the account, we blow up the account, we have no more ammunition to fight another day, and there will be no more profit. So now we're going to talk about our third system, and that's really our dots, or the workhorse of the program. And I'm moving back to 15-minute charts. Dots is based on MACD. We like it over most of the other indicators because they're really bound by no number. So it's into infinity plus to infinity minus. Most indicators are bound by 0 and 100. MACD is not. Also, we feel that MACD is the least lagging indicator. All indicators are lagging. There are none that are telling us or telling us what's going on in the future, but MACD is the least lagging. Of the systems that we support and in our program, dots give us about 70 to 75% of our signals. MACD really started out as a way to identify crossovers. Fast line crossing over slow line, or histogram crossing over the 0 line, vice versa. And we found that move was well underway when that cross happened. So really this is trying to identify a potential move prior to the move happening. So we wanted to anticipate this cross. When the momentum stalls is when we want the signals to anticipate and to enter the market a little early. We don't want to be too early and we don't want to be too late. Filter out signals, MACD must fall a present differential before a signal is given. And this calculation prevents a signal from occurring too early based upon MACD directional change. So really what we're talking about here is we want to try to filter out as many false signals as possible by giving it a predefined or predetermined number in which MACD has to fall in order to generate a signal. Now, not all signals are going to be winners. That's why we have specific rules to exit the market if we have non-performing trades. So on some of the black dots, we talked about a reversal hanging on to it for 5 candles. On a black dot or a white dot, depending on the background that you have on your chart, we would want to hold those approximately 8 candles. We want the market to show its hand because we know that a black dot is in concert with the chart time that it's on, but it's not oversold or overbought. But it is oversold or overbought on the particular chart that it is. So we want to give that a little bit more time. And if after 8 candles we are not into profitability, then we have decisions to be made. And those decisions are to cut bait, to leave the market, cover that short or long, and or move our stops up to protect our account and stay a little bit longer, depending on what our other correlated pairs are doing at the same time. We want to take heed to what that's going on. So how a dot prints is, and I'm going to move up the euro yen here. A dot prints after we have a directional change in MACD, and usually prints between 1 to 3 candles after all the criteria are met. So here MACD was rising or going lower, and we got to a point where we had the highest or lowest histogram candle, which my cursor is on right now. It met the requirement, it rolled over, we had a dot. 2 candles after the low hit, we had a trigger candle, two candles after, and good trade moving forward. That was a winner from this morning. So after the high or the low is recorded, we get a dot. And to make dots even more accurate, the system looks at the 4 times higher time frame. Now, in order to get a dot that is in concert with the 4 times higher time frame, it's characterized by a red dot for short and blue dot for long. Now, that particular dot is a stronger trend. We give those a little bit more time to stay in, and typically that is 10 candles, 8 for blacks, 10 for with trend and the higher time frame. So after 10 candles, we have a decision to make, whether we're going to stay in that trade or, like I was saying before, move our stops closer and ride out candle by candle, dot in the opposite direction, or a MACD cross. We'll talk about a gray dot, which really is our least accurate dot. And here comes one right here, and this is on the Euro Aussie this morning. Gray dots is really an attempt to warn us about scenarios when it might not be prudent to enter the market. Red or blues obviously much more agree with the higher time frame and are also with our trend. are with trend. Gray dots really are a good exit strategy. We talk about those unless you're really good at our system and looking at gray dots and or correlation. Yes, Bruce, I am. We would tend to use gray dots as an exit strategy and not really an entry. As we move up in higher time frames, we certainly like taking gray dots as they are a bit more accurate. When we see black dots above and below the market, another scenario that we often get to is in that choppy market or a channel type trading scenario where we have dots above and below price. And that's a very good trading style. And let's see if we can go back a little bit further. And again, I apologize, but signals are what they are. And here would be a good example of maybe a choppy market. We have a black dot here, gray dot here, blue dot here, where the market between this 24-hour period of time is from around 122.54 through 123, let's say 20. That's about a 70 pip move. And in that 24-hour period of time, we had three trades. Two of the three were winners. This particular black short wasn't very good. Gray dot was nice. Blue dot long was good. So in that basic, 18 to 20 hour period, was indicative of what I would consider a choppy market. I'll move back a little bit further, and we'll go on to the pound. This is a better chart to look at as a choppy market. Here we have a gray dot, calls out a very nice bottom. Have a black dot short, nice movement down a little bit. Obviously rolled over, came down nice. We have a gray dot long and a black dot short. So this is a nice choppy market. This is obviously a little bit wider from about let's just call it 156.70 through 155. That's about a 120 pip move of chop, but still very nice. The signals called out pretty good. It was a reversal, nice move down, breakout down. Called the market from around 156.77 down to 155.51. That's around a 200 and some pip move. Good. And that was a good movement down. So our exits on the dots that we've been talking about is either time-based, 5 for a reversal in gray, 8 for a black dot, or with trend, red and blues. We want to hold on to those to a little bit more time, at least 10. We also have a MACD cross where MACD goes from negative to positive. That would be a closure, or negative to positive to negative, depending on if you're long or short the market. In a trending market, trade with the higher overall market trend. When we talk about this, I've specifically told most of our members and produce many YouTube videos with showing trading directionally with what our 240 charts are telling us to do. If we have shorts on any one of our pairs and they have validated, then I would say to stay short with what we're doing on the lower time frames. Again, trading with trend. In a trending market, trade with the higher overall market trend. In a choppy market, always initiate a trend from an extreme price, overbought or oversold. Kind of like our pound scenarios here, which called out a overbought scenario here, oversold scenario here. Again, moving down, 4 nice trades in a row. This is the pound dollar. This is over the last day and a half. Color dots really tell you what type of a trending market or type of market we are. Color dots tells us which market condition we're in and how to trade that. So if we have red or blues, that's with the overall trend and the 4 times higher trend. If we're in a black dots, that's really indicative of choppy markets. Reversals, obviously we know that, that's an orange dot, tries to identify extremes in the market. And gray dots, I would say, are more ending or exiting strategies versus really initiation strategies. However, on the higher time frames, I would look to trade those trades. This morning in our live trading room, something that I talked about, and again, I like to look at how certain pairs are traveling against other pairs. And this was a perfect example this morning, and this was about at 10:30 this morning. Called out this trade, and I said that this was a very nice scenario and setup. Here we have the euro dollar, the euro yen, euro Aussie, euro New Zealand, and then underneath here we have the euro CAD. All of which, within 1 or 2 candles of each other, had dots going long. Now, this is a perfect setup, happens all the time, and my reaction to this is that we must go long these pairs, or any one of these pairs, and take a long trade. Any one of them, all 5, were winners. So we're getting an over resounding signal here across multiple pairs, all correlated obviously because of the euro, but all of them stay long. So this was a perfect example of how correlation can help intensify or enhance the probability of our signals obviously being winners. So again, 5 signals all showing long. Euro dollar happened at 10:30 signal. The euro yen at 11. The euro Aussie happened at about 10:30. Same with the euro New Zealand, and euro CAD was about 10:30 also. So 3 of the 4 happened at 10:30, the other 2 came 1 candle afterwards. So that's a perfect setup. Happens all the time. This is what I try to tell people and instruct folks how to trade correlation and look at your family members, what they're doing, how they're doing, and if they're all flowing in the same direction. If the euro is getting stronger across 5 different other currencies, well, that really tells me that the euro is getting stronger. I got to go with those moves. Another thing that it does for me is it controls some of that emotional baggage that we all carry around with us called apprehension. And when we get setups like this, we should lose all of those obstacles that prevent us from trading. And this was, again, a perfect setup. And this was this morning. This wasn't something that happened 5 years ago that I'm pulling out of a hat somewhere. This was an actual trade this morning that I told people to take in our live room. I'm going to shorten these up again and take a look at the pound this morning, and something that I cautioned people about this morning on the pound. Same, all of our correlated members are doing the same things. When we see correlated setups not working well and pairs not doing the same thing, that's a time when we want to hold off and maybe not take that trade and think twice. Well, this morning we didn't have any signals. We did have a breakout, which was a minor winner, but overall it wasn't a great winner, but still a winner. We had no signals on the pound yen. We had nothing on the pound Aussie. We had, and this is later in the day, but nothing around that same time period, consolidation on the pound New Zealand. Nothing going on 9, 10, 11 o'clock. We did have a breakout on the pound Swiss franc, which was in concert with our pound dollar, but then again nothing on the pound CAD. So we really we had the pound not really doing very much against like currencies or other currency families. So really it was a stagnant trade, and I told people to really stay out of that trade and to protect your account. Not a lot of movement, very, very tight market where the pound was considered. And I want to bring up an Aussie dollar trade from early or mid last week. We had a very nice black dot here around the 150 range. This right now is about a 300 pip move, and if I would only take long trades with this particular, and when I'm saying long trades, meaning on the 15-minute charts, I would almost have 100% accuracy trading the 15-minute time frame, trading with my 240 signals. Now, we don't always get that great of a win ratio, obviously, but the probability of success is a lot greater when we're trading with this overall trend. And I do have examples on YouTube about trading with this type of a strategy and how we are actually 6 times more profitable trading in this type of a scenario. Long on the 240, and then if we are at our screens and have the time in which to manage a 15-minute trade, we trade directionally only with this long. It's a tremendous trade, and tremendous trades on the 15-minute chart. Many of you, I hope, can go look at your 15-minute charts that have the system and see for yourself that this is a proven methodology and a proven way to trade this system. Do want to talk about this pound. Same thing on the pound during the 15-minute charts from somewhere around the 13th of the month, which was 5 days ago over the weekend, so 3 or 4 days worth of trading in through today, going long on these types of trades. We had this long candle here and a validated short. It did semi-work out, but in the end we had a stronger move forward. If we would trade directionally long again on the pound from somewhere around the 13th or late on the 12th through now, we would be very, yes, Jaime, I will show the 15 Aussie in a minute and talk about some long trades with the long 240. The system has been very accurate on the Euro 240 as well as the 15-minute, these overall signals, and basically from somewhere around the 28th, 29th, we've had shorts along the way. So from this particular price point here, we've had about a 400 pip move down, and it started out with this black dot short, and then we had another short, and we've had multiple shorts along the way and continue to be short through today. So the system has, for since the 28th, 29th of last month through the day, so for the past 19 days, has called out short on the euro all the way through. That's pretty nice. something that the euro pound also. Here again, talk about trading with correlation. We had a very nice move down in the euro against the pound, and on our other pound chart, we saw that the pound moved higher against most currency pairs, so it would happen the same thing. So around the 28th, 29th, we saw the market on between this cross pair here, euro pound, go down, and this is a huge move on the euro pound. This is around a 200 and few pip move down. That's a big move. Remember, this is a pip and a half on trading the euro pound. So very nice movement down, and still calling us down. If this reversal were to happen that we talked about earlier, potentially euro will start to rebound a little bit, but that's remains to be seen. I want to show the New Zealand dollar. Blue dots going up, market nice run up. Nothing in through this, a lot of market consolidation, kind of a tight market when you consider on a 240 chart. And then on the 13th, we had a nice move up, 30 pip move to date. Again, we'll look at some 15-minute setups on these trades, going long only. So I'm going to jump to the 15-minute chart. And let's just go back to the 13th when talking about this. So we had a blue dot long, very nice move up from let's just say 161 through a validation here of 208, 40 pip move, dot in the opposite direction. Remember, our chart on the 240 chart was long Aussie, short dollar. So if we go long only Aussie against the dollar on the 15-minute chart, right? So forget about this gray dot. We exited the market. Forget about this black dot. Exited the market. We have a blue dot, was negligible at best. A yellow, negligible at best. So two trades that were break even at best here. One winner. Then we have a long yellow. Very nice move up. MACD cross happened about here. So that's 311. Entered in at 257. Let's just call it 260. So that's a 50 pip move. MACD cross got us out. We had a blue dot. Long. Negligible at best. Market didn't go anywhere. Consolidation. Blue dot long. So we're about 3 out of 5 right now. Winners. Blue dot long, nice move up. MACD cross, made a few pips here, but market continued to move up. And blue dot long here, we're still in this trade. No, excuse me, exited the trade as a winner. Only about a 10 or 15 pip move there. So in general, we were about 60% winners going directionally on the Aussie. Which would have been all longs. And we didn't really see very many shorts there either. Let's see where my New Zealand chart is. Talk about New Zealand. Again, talking about directional trades, and a lot of grays in through here. This is on the 13th. Some nice moves here. So if we would start on the, let's just start on the 13th to stay consistent. After 5 candles, we would have exited this market at a winner. Not very much there. Gray dot, nice move up to a gray dot short. So that's 2 winners directionally again. Blue dot, winner after 10 candles. We would have stayed in that trade. Yellow long, very nice move up to a black dot short. So that's 4 winners in a row. Forget about these blacks here. Don't want them. Going directionally only. 5th trade, move up higher, winner. Blue trade here would have been a loser. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. After 10 candles, would have been a minor loss. Black dot, huge move up to a black dot. So we're now 6 out of 7. Choppy market now. Market moves up. Another winner. 7 out of 8. Then we had 3 poor trades in a row. All for minor losses based on the candle rule. Then 3 nice winners in a row. So really just negate those. So anybody keeping track of where we're at? Sorry. That's 7 out of 13. No, 13 winners, all going long. Then another 2 here that are still. The first one we would have exited. 5 candle rule. Blue dot, we're still in this trade, no MACD cross, no nothing, and right now we're about break even or a little bit less on that. So as you can see, going directional only with our moves on the 240, that's pretty good win-loss ratio, I gotta say. And let's look at the pound. And the pound, really on the 13th, started it off. We had a breakout long, failed short. We were long on the 240s. Winner, breakout again on the long, so that's 2 out of 2. We had a breakout short, which was a winner, but we had the black dot long here. We would have exited that after 8 candles at a minor loss. Gray dot long, nice move up. So we have 4 winners, 1 loser so far. Forget about the black dot short. Gray dot long, nice move up again. Forget about the blacks. And a breakout, which was a winner. So again, negating these shorts along the way. In my mind, we get rid of a lot of the apprehension, a lot of going against the trend when we know that the market is already moving in a strong direction based on our 240 signals. So as you can see, this is something that I don't really believe is rocket science, but a lot of people don't want to trade that way and want to trade every signal, and that's fine. If you want a totally mechanical program, you trade dot to dot, MACD cross, etc. That's fine, you can do that, but using a little discretion and using what the market is telling us can obviously, as we see it here, increase the probability of our trades and our profitability. So now what I'd like to do is, we're about 55 minutes into the webinar, is open it up for some questions. So fire away if you have some specific questions about some of the things that I've covered today. Paulville asked about, on a 15-minute chart, how many pips stop would you use on a black dot short? Well, at this particular moment, I'm not really looking at black dot shorts, but if I would, what we teach people is either swing high, swing low of the day, whatever that might be based on the chart. So you would open up your chart, and if we had a signal here short, what is our highs of the day? Well, our high of the last couple of days was about 156.93 was the recent high. We go back a day, it's not that high, so we use that as our stop. So 156.93 plus a pip would be 156.94. I would make that my stop, and our validation would be 156.67. So that's around a 30 pip stop based on this scenario. Sometimes we use this if it's clearly defined like this, swing high, swing low, that'd be great. If not, we would use something like a 3 ATR. An ATR is average true range. You can put up a indicator, which I do have right here, and I'm going to expand that real quick. And the ATR happened to be on that particular candle of the dot candle was about 8.2. Let's just call it, to keep it simple, 10 pips. Okay, was the ATR. So multiply that by 3, you get 30. So this was very close to the swing high, which was a little over 30 some pips, and that's where we're at. Do breakout settings change when the market changes? No, we haven't really changed the breakout settings that much. I am playing around with some changing of ATR settings, so I am looking at that, tightening up those a little bit because of the way the markets are reacting lately. But when you go out to design a system, you really don't want to right fit too much, or optimize, if you will, a particular indicator or breakout settings. You want them to be robust enough, and as I said earlier, that you don't want them too close or too far away that you get false signals. So there's a fine line in developing a system and developing an indicator, so it's not right fitted. So when the market does change, you still get good signals long term. What we're talking about is having signals generated, long term, that are quality signals that we can, rely on. Can I explain trade copier? Yeah, it's something that we've started with MT4 and a trade copier. And essentially, the trade copier would mirror our signals, what we would deem to be more probable trades. We would trade or send to trade copiers what we feel would be the best of the best. Kind of like the setup we saw this morning on the euros. We would send out a trade like that. The copiers would all take that trade, and we would set the stops, etc., and take it all the way through, from the start of the trade all the way through the end of the trade, where we would exit that signal and or that particular trade. So that's how the trade copier would work, and that is working with one of our FCMs called ILQ. It's specific to them, and we can give you more information about that. By the way, ILQ is offering a 5% bonus on any new accounts and or additional monies going into listings. Yeah, Theo's asking about futures trades. And nice thing about our system is we trade all of the markets: equities, options, futures, and forex. Again, we're a broker-dealer, so we introduce you to equities, options, and futures, our clearing firms, and give you some special settings on the futures contracts. We like a lot of the gold, the silver, S&P, the NASDAQ, etc. And we go after contracts pretty tough. Also, the system works great on 6E, B, any of the futures, forex contracts. We really like those. A great advantage of trading some of those futures contracts is you have a centralized feed, where in the forex market it's very segmented. Really, you're getting your data provider from your FCM or your say or where you get it from, and obviously the market is so vast. But when we're getting futures signals or that consolidated data, we're getting it from the CME, so it's true data. I believe it's cleaner data. I like that a lot. Doug, that's something that why we offered the trade copier for MT4. MT4, we do like MT4. We're looking at it very hard. So if you'd like that option, please reach out to me at john@currensys.com, and we can get into more about that whole piece. Theo's asking about my settings for the futures posted on our website. Theo, reach out to me, get specific settings for some of those futures contracts, and get you going. What are typical stop loss range on 15-minute signals? Okay. Well, Paul, we just talked about having a stop loss here on the pound dollar on this particular trade, and the stop was around 30 or so pips. And I really like to base it based on ATR. And let's talk about this gray dot right here. ATR on this particular one is way high. Let's just call it 18 pips. So 3 times 18 would be 54. 54 pips would be the stop on that particular gray dot long. Some other questions, please. We are offering a special on the system right now, and that is we're offering through the end of the week, through Sunday, a offer for $895 for the system. Normally is $1095, so $895 based on you guys coming into the webinar today. And here's a special link, and also you can reach out to me at john@currensys.com. Ratish, that's right. $895 lifetime access, correct. Bob asks about something, and Bob, reach out to me personally, John@currensys right now, and I will help you out with that information. Thanks, Theo. Theo says, excellent deal for the system yet. Very well rated on Forex Peace Army. Thanks a lot. Appreciate that, Theo. Sure, Ratish. Send an email to me, john@currensys.com, and I'll send you out information about everything that we talked about today. Olaf, yes. Reach out to me at john@currensys.com, and I'll help you out. Vinco, you ask about mentorship program. Well, I'll tailor make that to your specific need, and what he's asking about is mentorship, basically shadow trading or trading together. I can certainly tailor make something for everybody. Certainly this is our live trading room, but if you need specific help one-on-one, more so than we already do for you, we will work out something with all of our people. Paul asks about, do red and blue trend be more reliable than black or gray signals, vice versa from my experience? That's a great question. And the red and blues, obviously from what I told you today, really are oversold, overbought, not only on the chart that it's on, and we've looked at 15 and 240s, but let's just talk about the 15-minute chart. So it's oversold and overbought on the 15-minute chart, as well as the 4 times higher time frame. To me, that would mean a bit more than, say, a black and certainly a gray dot. Gray dots, as I said before, can call out lows or highs in the market. They are our least accurate signal. But as we see on this pound dollar chart right here, we have a good couple of gray dots. And again, those were with the 240 chart trend. So if I were to have a real world experience here, I would say that reds and blues are a bit more accurate than blacks or grays, but what is even more accurate is trading with the higher time frame direction. Doug, you send me an email on that. He's asking about live trade room, etc., password, etc. No, we've actually moved to a different room, so send that out to me. Email at john@currensys.com, and I can give you all the details on that. Rob, actually we are holding the room now on a daily basis, so it is open. Do I have any charts on gold, NQ, etc.? Yeah, I do. Paul is asking about, let's look at the gold contract here real quick. Gold, and this is on a 5-minute chart. I like working on it on the 5-minute chart. Some tremendous moves, some nice blues long here, tremendous blue dot run up, gray dot short, blue dot long winner, minor loser on the blue dot here. Then we get into some choppiness here where the gray dots really, this was later in the day today. This is a new chart. Really defined some highs and lows here in a nice choppy market where we had a nice short here to a black dot long and short going into the market close. Doug asks about some stocks that we've traded. I've looked at, there's 4,000 or 5,000 stocks out there. Anything with some movement. I like looking at Google. I look at gold. I look at some of the banks, JP Morgan. I like Dole a lot. That seems to have a nice trending move. Let's see. Let's see some other ones that I deal with. For now, those are a few that that I toss around. But really, looking at any particular chart, you'll be getting some signals. Most important is that you have some volume. So anything over 1 million shares transacted on a daily basis will give you some of that follow through. You also wanted to see the NASDAQ. Ask another question while I deal with that. Is it practical to work the system on the 30 or the 1 hour time frames instead of 15 working up to the 480 or daily? Sure, why not? I like the hour signals also. Don't really have a problem with that. Again, I would say trading directionally would be your best bet. And if you don't have time to trade or to stare at a screen on a 15-minute chart, then certainly working with the higher time frames is your best bet. Let's just talk about today. Short to a long, market moved up nicely. Black dot, blue dot didn't do anything here, and ending into the latter part of the day, nice blue dot long. This is the NASDAQ contract. Some people want to talk about this is oil. Some nice movement, breakout, movement up. Some nice trades in through here. Yeah, Doug, that's progressing nicely. Reach out to me. Theo says something about 60-minute is great to trade. Theo obviously has our program. We've talked to Theo quite a few times. Appreciate him coming in today also, adding his expertise and knowledge about what works for him. You know, I talk about in great length the using the system and trying to make it part of your own methodology or your trading style. But there are some things that you should just naturally do. Obviously, trading with trend and such. Now, obviously, know the rules, forwards and backwards. Always trade with a trading plan. So a well-designed trading plan of what you're going to do, how you're going to do, what time you're going to trade, etc. And importantly is trading always with a stop. So many times I talk to people about trading and they tell me they don't trade with stops or got burnt or whatever because they don't want to lose, and they think that they have a big enough bank in order to, you know, round out trades and let them hang there forever. You don't, and the market will always take from you more than you take from it. So unless you have your risk clearly defined, don't take the trade. Mark, we talked about the euro this morning. We had a reversal down. This happened around 3:45. Euro open, London open, nice move down. Then I showed this trade at 10:30 this morning, where we showed all of the correlated pairs. Euro against, you know, a basket of 5 other currency pairs, all moving forward. Nice move up to a red dot short again with the overall trend. This particular trade hasn't gone very far yet. So at this particular time, in my opinion, we would be moving our stops down a little closer. Again, the further we go out into time, the less and less probable the trade is going to be successful. So what do we have to do? We have to protect the account. So we have to move our stops closer, protect our original stop, protect our account, move it closer, and if we choose to stay in this trade a little bit longer, we manage it on a candle by candle basis. If it basically stays where it's at right now, going out into the future, obviously you can stay in that trade and or cover that trade. But if it starts to move with our signal, obviously we want to stay in it, and we want to move to break even at this point as quickly as possible. Again, protecting the accounts. First thing on our mind is always protect the account. Second thing, defining our risk. What's going on? How much am I going to lose if I'm going to take the worst beating that I'm going to take? How much am I willing to risk to be in this trade? Is my signal like other currency pairs? Is it moving in concert with the rest of my families? All these things come into play when we're talking about risk reward and being in trades longer term. Other questions? Doug asked me what platform are you trading on? This happens to be NinjaTrader, which I trade through NinjaTrader and through Forex.com. I also trade through ILQ, which is one of our liquidity providers, on MT4. Any other questions? We've covered a lot today. Again, I want to reach out to you guys and tell you that obviously we are offering a deal on the system today. The PayPal address is there. Any specific questions? currensys.com, john@currensys.com. I didn't look at Benoit. The FX calculator, the only thing that's not working on there, I think, is one of the correlations on the daily, I believe, and one other thing. But the majority of the calculator things are working, and the reason that we're having issues with that calculator is that it was written in such an old language that I'm actually having a hard time finding somebody to help us fix the thing. So we've considered just redoing it altogether, which obviously takes a little bit of time. But since we've been working on all these trade copiers and other rooms and you know, MAM accounts and things of that nature for our European people, that has really you know, taken a back seat to what we do. But for the majority of the things necessary to need a Forex calculator, it is working. And Rick MCD wants to know if I looked at ES contract. And I didn't look at the yet, Rick. Let me see if I even have that one up. Would an Excel spreadsheet do it? I would imagine. Chart. This is today, the 19th, and started out the day with a nice long, another blue dot long, 2 winners in a row, gray dot long. Obviously no shorts here. We did have a loser on a blue dot here, would have gotten stopped out, and then a black dot closing out into the end of the day. So 1, 2, 3, 4, 5, 4 out of 5 winners for the day. I don't think that's too bad. And again, that's 5-minute chart. That is today, the 17th, real time. This is real time data feed. This data feed happens to be through Kintick, which is one of our providers. Paul asks about does the system lose effectiveness on tick charts, or is it similar to minute charts? Nice thing about our system is it works on pretty much all chart configurations. I've looked at Kagis, Renkos, tick charts, bar charts, and all depending on your style and what kind of charts you like to look at. You know, you could trade it off of any of those. Yeah, the only problem with Renkos is I do have to warn you about is that Renko by its nature is a closed box, and there is a couple of Renko add-ons that actually give you the wick of the Renko with which helps you in determining you know, your entries a lot easier, because price is not always within that box. But I do like Renkos out a lot. Again, it helps to smooth out a lot of that market noise, and that's always what we try to do. So Renkos, Kagis, both help to do that because they're not time-based. Does each chart require an individual setup? Depending on the platform that you have, most of them we have already pre-made charts on the website for download. Point and figure, haven't really dealt with that one, Doug, so can't really comment on if it works there or not. All right, any other questions? You guys have had some good questions for me so far. I do have different setups for a 30-minute, 1 hour, 240, etc. And again, those are all on our forum and for download there. Yes, those are a little different with regards to our PIP rule of how we would engage a trade and how it would validate is different on different time frames. Anything else? Yeah, Theo says, do I have any settings for Renko range? Theo, really, I've used really the existing settings. You're not going to get any breakouts on a Renko chart and or a Kagi chart, just because of by their definition, they're not going to give you that explosion. So you're not going to get that. But as far as dots go, very nice. And I use the existing settings. That's correct, Theo. Yes. Rick asks, does the system work on major trading platforms? That is TradeStation, eSignal, TradeStation, eSignal, multi-charts, NinjaTrader, FXCM Strategy Trader, and Trade Copier. Elad asks about, is this recorded? Yes, I am recording it. Hopefully in the next day or so I will post it up on our YouTube website. And that's under currensys FX. Yeah, Bob, send a direct question to me at john@currensys.com, and I can get into that with you later. All right, been in here about an hour and a half. I appreciate the lion's share of you guys sticking around this entire time. Been great. Any other further questions? Thanks, Theo. Appreciate it. You were a big help today. Appreciate you chiming in. Theo has been one of our currensys members for quite a while. Glad he's having success, following the rules, etc., and doing a good job. So, thanks, Paul. Appreciate the nice words. All right, guys, that's it for the day. Any other questions, concerns, etc., reach out to me at john@currensys.com, and look forward to hearing from you, and certainly looking forward to helping you with success in trading whatever markets you choose, equities, options, futures, and Forex. We certainly can help you get set up in all of those markets, and certainly mentoring, etc. That's what we do. All right, thanks, guys. Stay strong.